Welcome to the Work, Wealth, and Travel podcast. I'm your host, Nicole, and this podcast is your guide to start creating a lifestyle by design. From entrepreneurship, money and finance, taxes and residencies, and everything in between, this show highlights the nuances of a true global citizen lifestyle. Let's dive in. Hello. My name is Nicole of Work, Wealth, and Travel. So I just hopped off of a webinar with the global brand SafetyWing, the insurance for digital nomads and global citizens alike. And I wanted to share that presentation. It was about an hour long. I'm going to condense it a little bit here, but I wanted to share that with my community as well. So this is going to be on the YouTube channel and on a podcast episode as well on the Work, Wealth, and Travel podcast. However, it is visual, it is a presentation. If you can only listen, then audio could be the format for you right now. But I highly do recommend heading over to my YouTube channel, which is Work, Wealth, and Travel. I'm going to be posting this recording there. This is the exact same recording that I did for SafetyWing just earlier today for their presentation, but it has really good information on the beginning steps and the steps that you can take to start thinking about what your global citizen journey is going to look like. So I, of course, wanted to share that with my community here. And this may be a little more elementary than some of the other videos that I have, which really deep dive on X process in X country. This is going to be at a much higher level. And the audience for this presentation in collaboration with SafetyWing was digital nomads, global citizens who are looking to start thinking about and setting up their company globally in a tax-friendly location. So I definitely dove on some of these beneficial jurisdictions, but I also dove on the considerations that you have to take into account before actually establishing this tax-optimized business. Establishing the business is not step one, which we're going to dive into. So I talk about this and so much more in the presentation. Let's dive into it. I'm going to share my screen and I will. All right, perfect. Are you interested in becoming a global citizen and living a lifestyle by design in a country that aligns with you? If this is a lifestyle that you're seeking to create, we can help. Whether it be multiple residencies, citizenships, bank accounts, trust or company formations, we operate in 30 plus of the most tax-friendly jurisdictions around the globe to get you structured properly. Head to the link in the show notes to learn more and to get your global citizen journey underway today. So I should have you know what? I'm just going to share my whole screen, because that seems to be easier. And I'm going to go ahead and present here. Okay, let's dive into it. So this is the exact same presentation for SafetyWing. If you are looking to get started on your digital nomad global citizen journey, this is the perfect, almost masterclass for you. So it's called Beyond Borders, Unlocking Profitable Jurisdictions for Entrepreneurial Nomadic Content Creators. So I had a poll, and please do leave your answer to this poll in the comments below. And in the SafetyWing presentation, it was about 50-50. And they will actually upload this presentation. It's the exact same presentation, but they will upload it on the SafetyWing YouTube as well. But we did a poll right before we dove in. And it was asking, do you currently have a tax optimized business in place, or are you considering establishing one in the future? It was about 50-50 for if those watching currently had a tax optimized business in place. So just some interesting information for me and potentially for you as well. About 50-50 from the audience that was live on the webinar. Okay, so what will we learn today in this masterclass? We will learn why a global lifestyle and diversification is so important. That will definitely be hammered home in this presentation. We're also going to learn some beneficial jurisdictions for digital nomads and for content creators for a company formation. We're going to be talking about pieces of the puzzle to start your own strategy. Every individual strategy, and I definitely stressed this in the presentation, is going to look different. We're going to talk about some of these beneficial, low tax company formation jurisdictions. It's not a one size fits all for everybody. What works for you is going to look completely different for somebody else. And we're going to dive into a lot of information today. So get ready. If you have some understanding of this topic, then you may be able to keep up pretty well with this. But if you're a beginner, this is a place to be for you, and watch this 2 or 3 times over again if you really want that information and need this information to sink in. We're going to dive into quite a bit today. Okay, so who will benefit? Digital nomad entrepreneurs, global citizens who are looking to establish their lives and their businesses abroad, those not planning to return to their home country in the future. This is an important piece of the pie, because if you are not planning to return to your home country in the future, then you can absolutely move to another country, get residence, tax residence, set up your business so it's potentially no or low tax somewhere else. If you're planning to live in Germany, stay in Germany, you have the German passport, you have a house there, this is not the strategy for you. This is truly for those global citizens and digital nomads. And I differentiate those two. Personally, digital nomad being somebody who travels, maybe they're outside of their home country 1 month per year, maybe they're outside 12 months per year, but they don't know what that future long-term looks like. Whereas a global citizen, you're really establishing your lifestyle abroad. You likely know you're never going to be back in your quote unquote home country or passport country, and you are really establishing investments, real estate, banking, residence, business abroad, somewhere that is benefiting you. So we are also going to be looking at taking advantage of tax breaks and low tax in countries around the globe that we get these low tax benefits when we're no longer tied to our home countries, which we're going to be diving into further. Okay, so a little bit about me. If you don't know my story, my journey, I'm Nicole of Work, Wealth, and Travel. You can find me right up above here on all of the social media platforms. So I've been a digital nomad and an expat, both, and I've experienced the pros and cons of both of these lifestyles. I left my home country of Canada in 2017, and I never returned. And at the time, I hoped to never return. If all really went well, I would never be back. Thankfully, it did. But I am the master of whether that plan really turns out for me or not. And then while I was living and working in China, I was continuing to pay taxes on the income that I was making in Canada, my Canadian source income, while I was abroad. So that was not fun. And then I opened my business. I started educating myself on this globally diversified world of paying no tax completely legally in all of the beneficial jurisdictions that could help you do so. And now I help others, and I help my clients who come from around the globe looking to be diversified global citizens. So this doesn't only mean low taxation jurisdictions and company formations. That's really what we dive into in this presentation. But I also help my clients obtaining additional residencies, citizenships. I recommend having multiple, if not more, of both of those. Having diversified options, so diversified investments, whether that be in different stocks, shares, or real estate in countries around the globe, and also banking options, which is a topic for another day, maybe for another podcast and YouTube episode, because banking is getting increasingly more difficult. And I actually have a part 2 with Mohammed. He was episode 161 of the podcast, I believe, where we talked a little bit more about the global citizen lifestyle. We're going to have another one coming out next month, I believe it is, where we dive into banking options, because it's only becoming more and more difficult in jurisdictions around the globe to open bank accounts specifically for personal, but I digress. Okay, so why this matters? To me, this really matters because there are certain ways to build wealth, and entrepreneurship, in my opinion, is one of those ways. But many governments, especially Western governments, increasingly want to keep the middle class, and sell the middle class American dream. This dream is not for the wealthy, and many of the wealthy are beyond the government's control. But the government wants to control and tell the middle class what they can and cannot have, how they can and cannot live their lives, what they should be investing in. And for me, that is not how you build true wealth, especially in a country where it will tax you highly if your business is profitable from year one. Now, there are many other governments around the globe who reward new residents and businesses with great incentives. And some of those incentives we're going to talk about, which are low or no tax. So this is a possibility, but some of these other countries where they're really trying to keep the middle class are not going to benefit you, not going to benefit your business. In my opinion, if you are a global citizen, you should go to the place that gives you the most benefits, which is why I left my home country 7 years ago with absolutely no plans to return. Okay, so it's important to note that you have options. If you're a global citizen, a digital nomad, and you have a life abroad, and you don't plan to return to your home country anytime soon, yes, you have options. Today, as I said, we're going to be discussing some of these lucrative jurisdictions where you can start out by establishing your business. Whether it's a new business or an already well-established business, there will be different jurisdictions that may be best for you. So, some important considerations before we dive in. You don't want to set up your business in a tax beneficial jurisdiction as step one. We're going to talk about this in a few slides. Depending on your current country of residence and citizenship, you may need to leave that country first. Technically, on paper, yes, you will have to leave it as a resident. Of course, you physically have to leave, but also on paper, you will have to leave as a resident. And this looks different depending on the country that you are tied to. Every country has different rules, has different laws. It's going to look different depending on the country that you are tied to. So you want to look into this as step one. So diving into some more important considerations, next up is that governments and their programs, their incentives are always changing. And usually, unfortunately, these changes are not to the benefit of residents and business owners. I always recommend getting in on a program now while it is still available. In the past few years, but even in the last year alone, we have seen countless programs increase their capital needed for company formations, business formations, programs that could lead to residency, citizenship. It varies based on the country, but almost always these changes are not to benefit you. They are to benefit, of course, the country. The country wants more capital to come in, so they're going to raise the standards of this program to attract a different and a higher quality investor. So a good example of this is the Panama Friendly Nations visa. There are around 50 different friendly nations that you can obtain residency with in Panama. So it used to be, just a few years ago, you would have a 5K bank deposit into a Panamanian bank, along with a few other small criteria, documentation, bureaucracy, of course, and then you would get your Friendly Nations visa. Now, they have changed it in the last few years to be a 200K investment in real estate in the country. That is a huge difference. A 5K bank deposit that almost anybody can do and attain to 200K in real estate. It has to be in real estate. So, interesting change. Definitely, they are looking to attract a different type of person, which, hey, all power to them, but you do want to try to get in on these programs while they are still available. We never know when they will change. And unfortunately, like I said, usually will not change for the better for you. So the next consideration, when assessing where to establish your company, other factors such as the business activity, the business annual income, personal residency, among with others, are also assessed, along with the 5-flag theory. So you've probably heard about the 5-flag theory. I'm going to dive into a little bit about this right now and its importance. So it actually started as the 3-flag theory. Now is called a 5-flag theory, is what it's commonly known as. But there are easily 9, 10 plus flags out there in today's day and age. So the 5 core flags are citizenship, residency, tax residency, business formation, and banking. Now, let's use the example of if you are a German citizen, you live in Germany, so you're a German resident. You live there, so you're a German tax resident because you live there more than 6 months a year. You have your ties in the country. Your business is in Germany, and your bank accounts are in Germany. Now, if you plan on staying in Germany, this is great. But you now have the German government laying claims to essentially every area of your life. your business, your citizenship, your residency, your banking, which is huge. Even if it's diversified in multiple German banks, they're still German, especially if they're public banks. So as a diversified global citizen, digital nomad, you want to try to plant these 5 flags, and I'll dive into what some more of them could potentially be after. But you really want to try to plant these 5 flags in as many different countries as possible, which does take time, it does take effort, and it does take money. But you want to diversify so that no one country, like Germany in this example, can lay claim to absolutely everything you have and your whole life and has all of your information and data. So you want to have, I recommend now having 2 to 4 citizenships. I think is safe. 2 is even a little low, especially if they're both from Western countries or similar countries. And then you want to have residency, so live in a country that is different than your citizenship. You want to also have a different tax residency if possible. You will likely, not always, depending on the country, but likely also have a tax residency where you are a resident. But there's no limit to how many residencies you can actually have. You don't really want to have multiple tax residencies, ideally, but you can absolutely have different residencies. The common Western countries, you'll have to live there and have ties there, but there are so many other countries that really benefit us global citizens. And you don't have to stay there for even a set amount of days sometimes to get residency. So those 2 can be differentiated, although I did get some questions about that in the original presentation. So I wanted to address how those could be split up. Your business formation, these jurisdictions that are low, no tax, really benefiting the entrepreneur and the business and want to see you successful. And then banking. Banking, of course, you have corporate, which will likely be tied to where your business is, but then you want to diversify your personal accounts. Every country I go to, and I travel to a new country every 1 to 3 months, depending on the time of year and the month, I'm always in a new country. And usually the answer is no, but I like to go in and see if with any of my passports, I'm able to open a bank account. Typically, and increasingly more so now, you need to be a resident of that country in order to open a bank account. So it's usually a no, but it's still good to try, see your options, and any country where I can open a bank account, I will. Okay, so some of the other, and again, it's not limited to these by any stretch, but you also want to think in terms of the flag theory, your playground. So that is where you spend your time, where you enjoy being, maybe where you have a home. So real estate comes into play with this. Maybe you have yachts and you have a marina rental. So those are ties to that country as well. Digital privacy is becoming increasingly more important. Google, as an example, is based in whatever country it's based in, America, wherever else they have corporations. But so the American government and Google is going to lay claims to most of your digital privacy. So that's important. You want to use another service like Proton Mail. Still not really the best, but there's no perfect solution out there based in Switzerland. You want to use something if you are worried about that digital privacy, the digital aspect. You also have asset havens. So this could be where you invest your crypto, where you have investments in different markets around the globe. And you really want to try, if at all possible, and I know it's tricky and it takes years and decades to really have a diversified lifestyle in terms of the 5 flag theory, but you want to try to have all of these categories you see on the screen here in as many different countries as possible. You don't want one country and one government to lay claim to absolutely everything you own. Okay, so now we're going to be talking about some company formation jurisdictions that can be beneficial. So first we have Estonia, very popular with digital nomads. There's a 0% corporate tax rate and 20% tax on distributed profits. Again, all of these, not only Estonia, all of them can change in the future. But as of right now, this is where it stands. I don't know when you're watching this, but as of 2024, this is what it looks like. So 20% tax on distributed profits, and VAT is only required when you have 40k euros or more annually in the business. So that's nice because you are only really getting taxed when you take money out of the business. If you keep money in the business to reinvest, no tax. And until you hit 40k, no registration for VAT is required. They do have the e-residency program, which I have a little bit of an issue with the name of e-residency. It's very misleading and it makes it sound as though you will be able to become a resident online. which isn't really the case. It's more so management of current residency online. And of course, you have to meet certain requirements to become a resident in Estonia. You can't just sign up for it online. A little bit of a misleading name, but it is what it is. Okay, next up we have Singapore. So Singapore, the taxation starts at 17%, but there are startup tax exemption schemes for the first 3 years in your business. So there's a 75% tax exemption on the first 100K of income, and then a 50% exemption on the next 100K. This is a great financial system, Singapore banking, and of course they have many trustworthy banks and banking options. So this would be reliable if you are really looking to grow and scale your business to multiple millions. I like Singapore because it's a great example of a country wanting to grow your business and wanting to support you those first 3 years when your business is an infant, is a baby. They're really supporting you with the tax breaks so that you can then grow the business and maybe in the future bring them tax dollars, but they're really supporting you. And for me, being a global citizen, those are the countries that I want to support. I want to support countries that support me. Next, we have the US, UK, and Canada. So these 3 countries offer pass-through entities, also called flow-through entities, you may have heard, so that taxation in the business flows through to your personal residency. This only works if you're a foreigner in that country. So I'm Canadian. If I go to open a flow-through entity, not going to work in Canada. Not going to work for me. Stipulations are in each country. So for example, you can't have employees in that country. You physically cannot be present and work in that country. So depending on the country, there are some stipulations like that. And then there is potential for more reporting requirements depending on the country. So as of January 1st, 2024, the US requires the BOI filing. They also require annual filing in your state. You need a registered agent. You need to fill out the 1120. There are some other accounting forms that you need to fill out. And that can get expensive if you have a multi-member LLC. Single member, it's pretty straightforward. I would still have an accountant, which we can absolutely help with to fill that out. But if you are having multi-member LLC, then it can get expensive. Also, you want to think about privacy. So especially with the US, but again, these countries can change their requirements at any time as to how they see fit. They, in the BOI, now require to know your address, your full name, your passport, actually, as well. You get a copy of that. They want to know where you're a tax resident of, the address in your country of tax residence. So they really have all of your information on file. And privacy, if that is a concern for you, is not really going to be there, unfortunately, anymore. So you also need to understand the reporting requirements before opening. As I said, there are quite a few forms, especially for the US, but there are forms to keep any company open that you're going to have to file annually. And you want to really understand these requirements. I have heard quite a few horror stories, unfortunately, and clients coming to me to fix it, to where they open up a Wyoming LLC, something very standard and straightforward and easy, but they don't realize that they have to do all of the filing. Even if it's a flow-through entity and there's no tax, you still have to do the filing every year. You still have to do the annual state filing. And if you don't do that, your company can get closed down. So this is important to note. You really want to know the full picture before you actually invest the time and the money to open the company. And next up, we have Bulgaria. So Bulgaria has the lowest tax rate in Europe. There is a 10% corporate flat taxation rate, which I love, flat taxation. Of course, although it doesn't happen too often in most countries, you can get up to a 7.5% personal tax rate when operating as a freelancer if your business qualifies by deducting 25% of your fixed expenses from your income, therefore paying effectively 7.5% in tax. Not too bad. And then dividends are tax exempt for Bulgarian residents. Again, residency is a piece of the puzzle that you want to figure out before having the actual company formation. Next up, we have Uruguay. I've spent the last year and a half in Latin America talking to my networks of accountants and lawyers, and there are so many beneficial, not only business formation, but residency citizenship schemes here in Latin America. So one of them is Uruguay. There is the free zone entity setup where you pay 0% tax if you are registered in a free zone in Uruguay. You must employ 75% local Uruguayans or have special permission, which we can help with depending on your situation and the business activity. And this can be for goods, of course, but it can also be for services. So for consulting, digital marketing, you can also have a free zone entity and pay 0% tax. Next up, we have Romania. So Romania is a 16% standard tax rate, but they do have the micro company regime. So if the business has less than €500,000 annually coming into its doors, then you only pay a 1% tax. And my apologies, I've been talking a lot today, so I need a lot of water. So you'll only have a 1% tax if you have less than €500,000 annually in the business coming through, and at least 80% of the business revenue needs to be generated from activities other than consulting and management, with having at least one employee in Romania. So there are a few stipulations, but potentially not for a startup business. But if you are somewhat established in your business and Europe makes sense for your business, this could be a really lucrative regime. Next, we have Peru. Don't hear many people talking about Peru, but they do have a scheme where if the business brings in less than about $140K USD, it's in local currency, but that is the approximate conversion, then you are subject to a 1.5% taxation rate. The typical tax rate in Peru is 30%, so quite a big difference. And dividends and capital gains are taxed at 5%. So Peru, I was just there a few months ago. Amazing. We didn't even go to Machu Picchu, and I was blown away by the country. But again, a good example similar to Singapore and all of these countries, quite honestly, where they are favoring a startup business. They want you to succeed. They want you to only pay 1.5% taxation if you're starting up, if you're bringing less than around 140K. I love to see that. Next up, we have Paraguay. So Paraguay has a flat 10% taxation rate on local owned companies. So they have the EAS structure, which is similar to an LLC. And we help our clients with this quite often. Very popular, especially when paired with the Paraguay residents, which I have a lot of content on this channel about Paraguay residents, and I myself am one. So we help our clients with this. So the owner of the business, if you are wanting that EAS company in Paraguay, does need to be a resident. It can be someone else and then transferred to you once you obtain your residency. And this is also good when paired with the LLC through the pass-through entity in the US, the UK, whatever that may look like. And then there's also in Paraguay, and I have some content on the YouTube channel about this as well, there's also the 1% tax of maquila law. So if you, and not only for goods, also for services, but I think maquila is more so thought of for goods. Maquila started in Mexico to have low shipping taxation, low import taxation into the US. So Paraguay adopted maquila law as well. There's only a 1% tax rate if you establish a factory and have employees in Paraguay under maquila law. But again, this doesn't only need to be for goods. It can also be for maquila of digital services, which I talk to my advisor on the YouTube channel. We have 2 videos of maquila law where we really go in depth on what that could look like. And the second one is really specific to maquila law of digital services. Okay, so last but not least, we have the UAE. So businesses with less than around 102K in business income for free zone companies have a 0% tax rate. Over 200K, if you make that, then it's a 9% tax rate, and multinationals are 15%. Not really applicable here, but good to know. The personal income tax rate is a nice 0%, and you can potentially get residency as well in the business and live in the UAE. So you can have residency, you can live in the UAE if you open a business there, which is a pretty sweet deal, if you ask me. There are some requirements around that. But the UAE is great for opening a business, but it is, in my opinion, a case of governments getting a taste for tax, which once they get a taste for tax, they will almost never regress back to 0% tax. So now there's a 9% tax. Will it go up? Will it stay the same? We'll see what happens in the future. But in my opinion, once they get a taste for tax, there's no going back. Okay, so the best freelancer options for the SafetyWing audience. Now, depending on the size of the business and the industry of the business, it's going to look completely differently, but some starting out options that can be good that I have previously spoken about could potentially be Estonia, could be Paraguay, it could be the US LLC, the UK LLP, it could be Bulgaria if you want something Europe-based. Depends on your residency, it depends on your clients, it depends on your banking needs, your payment processing needs. And I know I just talked about a lot. We still have more to dive into. But if you are overwhelmed, if you have questions, then you can email me, Nicole@workwealthandtravel.com. We can book in a call, really analyze your specific situation, because all of this is so situational, and figure out what could be the best options for you. Again, not only for business, but how can you work on getting multiple passports, multiple residencies, low or no tax in your business, depending on the business activity. There are so many potential options to really become a diversified global citizen and to embody that 5-flight theory. Okay, so before diving into the next part, some considerations. So company formation is not the first piece of the puzzle to paying low or no tax. If you're looking to live and have a business abroad with low tax, you should look at this first. So there's 4 steps here. The first step you're going to want to look into is your home country's residency. You don't want to start the company first. You don't want to open the bank account. The first step, and it's not fun or sexy all the time, but if you really want to do this in the right order, you need to figure out your home country's residency. So you can become a non-resident in your home or your current country where you're living if it's not beneficial to you as a global citizen. For Americans, this is going to look different than the rest of the world because America follows the citizenship-based taxation, whereas most other Western countries follow the residency-based taxation. So of course, if you are from a other non-Western country that's not America, then you can, and it's not always easy, but you can become a non-resident. In America, you don't really have that option. You're paying taxes, you're a resident, you're a citizen for life, and unless you plan on revoking your passport, which we do help clients with as well. So this is why being a non-resident is key to this plan. You want to revoke the residency from your home country or the country where you currently are a resident of. The revoking process is going to look different depending on the country, but they usually want to see more than just a simple days test. If you still have all of your ties to the country and you don't spend 6 months a year there, especially if you spend close to 6 months, so 5.5 months, 4 months, 5 months, something like that. It's getting close to 6 months can get a little bit dicey. They really do want to see that you have cut and severed almost all, if not all, ties to that country. Otherwise, they want your tax dollars. And I know this not only from client experience, but firsthand experience. This is what I have gone through. And I also like to liken all of this to a game. I call it a game. It is not always the funnest game, but there's so much strategy and so much planning that has to go into it to play the game. I've been playing the game for years now, and it is a game to me at this point, always optimizing and figuring out the best residence, the best banking to have. It's always changing as well. But once you leave a sturdy home country tax residence and start living this lifestyle, becomes more of a game. It's fun, but it's work. Okay, so the next step. So this was step 1, the home country's residency. Step 2 is your new tax residency in a beneficial country. So let me take a sip of water. So what does this entail? You have to become a tax resident in a low or a no tax country. A territorial tax country is great for this, or of course a no tax country like UAE, or a territorial tax country like a Georgia, a Panama. A territorial tax country meaning that they are only going to tax you on the income that you make in the country. Any income made outside of the country is really of no concern to them. So you want to be in a country you plan to live in and start a life in, but you also want to think down the road. Is this a country where I can potentially get a residency in the future? Or I can work my way to citizenship if I stay here for 2, 3, 5, 7 years. Pick a country that's going to benefit you and going to give you a good quality of life, But if you're really going to live there long term, can you work your way towards something, that residency, that citizenship? Can you work your way toward that? Because spending 5 years in Germany versus spending 5 years in Panama, you can get a passport if you spend that amount of time in Panama or various other countries, sometimes even less than 5 years. Why not work your way towards something if you're going to be spending time on the ground anyways? Okay, so step 3. So step 1, just to review, was home country's residency. Step 3, we have the new tax residency in a beneficial country to you. Step 3 is what we've talked about here, which is the low tax company formation. So based on various different criteria, where your clients are from, where you live, the payment processors needed, etc. All of this and so much more is going to be used to determine where the best jurisdiction for your business really is. So you want to make sure that you can bank easily and have various options for your business account in that country. This is an important consideration. In most countries, yes, you can open a business bank account when you have the business. In some countries, that's actually not the case. And it is quite difficult. Or if you buy a business in that country as well, there are certain cases where it will be more difficult for you to actually open a business account. And we're just talking about a business account, not even a personal account. There are some accounts where personal, even if you're a resident, can be a little bit of a headache. So you want to make sure you're choosing the right place and the right country for this game for you. You don't want it to be a major headache. We've navigated that with clients and we know what that looks like in certain countries. So if you do have questions, book a call. The link is below. Okay. So number 4 is banking. The fourth and the last step in this process. So first, you're going to want to look at your home country's residence, then your tax residence in a new country, then the company formation, and then banking. Water break. Okay, so banking is the last piece of the puzzle. So again, something that most people don't think about, especially for personal banking, but also for corporate, until it's too late. Can they open an account there? You just assume that. You don't know that until you already have the company structure, and then maybe you find out and it's not the answer that you like. So can you easily have access to various different banks in your new country of residence? You want to have, if at all possible, various. You don't just want to bank at one bank. You want to have some diversified options, even if most of your money is held in one. They close it for whatever reason, you want to have others available to you. Some countries don't offer safe or reliable banking. Is important to note as well. You want to see the reputation of that country, the AML. What is that process? AML is anti-money laundering. What does that process look like? And you also want to have as many accounts around the globe as possible for diversification purposes. So how can you open a bank account abroad? You can travel to the country. Again, doesn't always work, but you can try. You can invest in a property. You can start a business. You can keep a deposit. So it's either 10K usually, 100K, maybe 5K in the bank and keep that balance. Or you can also have access to private banking for those who are higher net worth in countries like Switzerland or Singapore. There is access to private banking as well. So a common missing piece to this puzzle. Before you start this journey and you cut potential ties with your home country, you want to ask yourself, will I be able to access my money, both personal and business, easily and through more than just a fintech bank? You want to be able to have fintech banks, of course, but also to have stable banks in that country that are not fintech options. So what is a fintech bank? Wise is a great example of a fintech bank. Revolut, 1026, Bunk. There's countless, especially in Europe nowadays. There's countless. And so you really do want the ability, of course, to have fintechs. They're easy. You can open them at home. You don't have to fly to a country or go to a bank physically in person. They're easy. They're good options to have. But more and more, and in some of the communities that I'm in and clients that I've spoken to as well, I have unfortunately heard of, for no explanation, both business and personal accounts, and sometimes they're linked as well, being closed. So if your business is linked to your personal, then your personal could get closed along with your business, which is unfortunate, but sometimes does happen. And a lot of the times they won't tell you why. They will just show you the terms of service, and they are not obligated to give you a reason or to ever reinstate your account again. So fintech banks are great. but you really do want to make sure that you have stable banking options in as many countries, I believe, for diversification purposes as possible. So that was everything. I know we covered a lot today, but if you are looking to connect, you have my email right here. If you're watching, you have it on the screen. If you're listening on the podcast, it is Nicole@workwealthandtravel.com. My website is workwealthandtravel.com. You can connect with me on LinkedIn. You can visit me at all socials. It's Work, Wealth, and Travel. And really where I put a lot of my long form content and information similar to this is on the podcast and on YouTube. So if you're interested in learning more, then those are the two places you're going to want to check out. And of course, since this webinar was created initially for SafetyWing, if you are interested in becoming an ambassador for SafetyWing, then I highly recommend to do so as well. You can make passive income in your business while traveling the globe. So, thank you for being with me here today. I know that this was a pretty long masterclass, but I hope that you got a lot of information from it. If you have any questions, put them in the comments below. If you're on YouTube, if you're listening to the podcast, probably Instagram is the easiest way. And I look forward to seeing you around in the community and connecting with you further. You've just listened to the Work, Wealth, and Travel podcast. If anything from this episode resonated with you, I would appreciate if you share this podcast on your socials. And of course, be sure to tag me. And don't forget to leave a review on your favorite podcast platform. Thank you for joining me on this global citizen journey, and I'll see you in the next episode.